Hey guys, and welcome to today's video. So in today's video, I'm going to be looking at liquidity, and by the end of today's video, you should be able to know how to apply what we're going to share in this video and be able to take trades in real time. So without further ado, let's get right into it. So you can see these images on the screen. So typically, if you're familiar with price action, you already know this is an uptrend, and you're familiar with price action also, you know this is a downtrend. So how do you go about liquidity in this concept? I want you to understand that liquidity is simply where the money is. Now, if you're in a buy trend, it simply means you're going to be placing your stop loss below this low. You get it now? You're going to place your stop loss below this particular low. And when you place your stop loss here, that is liquidity already being placed in the market. You know what I'm trying to say? So you can just simply view liquidity as where you have previous buy or sell order, or where you have pending buy or sell order. You need to understand that. For the market to really move and deliver correctly, it needs to seek liquidity. It needs to do what? It needs to seek liquidity. So in an uptrend, we can have a scenario of price come down here, tap into this liquidity, and expand all the way to the buy side, or we could see price actually clear the entire liquidity here and push to the buy side. Same can also be said for the sell trend. So right here we can see price come tag into this area, push to the sell side, or price might come for all of them, then come to the sell side. So we want to see this particular principle in real time. So we're going to go onto the chart and see how we can apply this. So right here now, looking at this particular chart example, you can see I already have a markup here. You can see price made a high, then a low, then a high right there. And the moment this price action was already printed in price, we can see that price left a low right here and also a series of lows right here. So you can see the way price pushed downwards, tag into this particular liquidity, and we can see how price expand all the way to the buy side. So based on the concept we shared earlier, this is going to be a buy scenario. Now moving forward to another example, we can see right here, we see price move downwards, price move upward, then price created a lower low. Then now we can see right here how price came here, tag into this particular liquidity, and you can see the way price delivered all the way to the sell side. So you can see how that was nice, and this is actually a 1 to 4 risk to reward. And mind you, I'm on the Euro AUD on the 5 minutes time frame. So you can see that understanding where liquidity is in the market can help you time your entry properly. And you can see also we are keeping it very simple. We're trading in line with the trend, and we are getting the entry once we get a liquidity being taken out or being tagged. You get. So let's move on to another example. So right here we have price move upward, price came downward, then price move upward. Now you may be asking, where is the liquidity? So this particular scenario you get is a very key one, because we can actually use that for our learning. So we can see that why price created a higher high over here, price created an equal low around this area. So you can see this low took out this liquidity and created a push to the buy side. Then price came down and tagged into that liquidity, clearing and sweeping this particular equal lows right there. And you can see how price delivered all the way to the buy side. So you can see practically still the same concept and still the same approach. You are in the trend, you wait for liquidity to be tagged, and you watch price deliver in continuation with the trend. So right here is going to be the final example, I believe, for this particular video. So we can see that this one is different, and I actually saved it for the last. It's not in line with the trend, but we can see that price took out liquidity above this high and price delivered all the way to the sell side. So one market condition I didn't share in the beginning of the video is the consolidating market condition. So that is a particular market condition that practically would help you anticipating this kind of trade. You know what I'm trying to say? So once you see price come back to a previous high, it can be the high of a previous day, it can be the high of the previous week, it can be the high of the previous month or the previous session. Then you want to watch how price react off that particular area. But what you want to do in situations like this is that you want to wait for extra confirmation. So the reason why here would be an entry for me is because with my understanding of candlestick pattern, this is actually a reversal pattern right here. So the moment price run that particular high and gave me this tweezer pattern, I already know that we are going to be making a downward move to the sell side. And to couple it up, I can see that we have series of liquidity resting below these lows. So you can see the way price came right there, sweep all this liquidity, and that completed the delivery to the sell side. So if you find value in today's video, I want you to hit the like button, hit the subscribe button. And if you're looking for a broker to trade with, I have the links to the brokers I use currently in the description. And if you want to be part of my Telegram community, the link also is going to be in the description. And also, we're on TikTok and Twitter, so please make do to support us on our various social media platforms. Until next time, see you in more videos.